What's going on, everybody? Kevin Cage here with another crypto update. Happy Friday, and let's dive right into today's video. So we're going to go over Ripple Treasury. Keep in mind that Ripple, the company, acquired G Treasury back in 2025. And in a recent article that came out, we can see that following this acquisition of G Treasury, Ripple Treasury facilitated $13 trillion in payments volume. Now, what's really important to understand for treasury systems globally, they're primarily based in fiat, and the goal is to build infrastructure to bring in digital assets. So we can see digital asset accounts, not a bunch of separate wallets. Everything's going to be in this unified system into digital assets for the first time. So the number to remember is we're at $13 trillion in payments volume thus far, and I believe the majority of this is fiat. And remember what Brad Garlinghouse, Ripple CEO, said back on October 16th about this G Treasury acquisition, going over the corporate treasury payments market is $120 trillion. So remember that this doesn't mean that the Ripple US dollar or XRP is processing this money yet. It's just Ripple trying to build that pipeline or that entry point. So that's important to note. Point being is this market is absolutely massive. And when we even zoom in on treasury.ripple.com, we can see the fiat down below. I don't see the Ripple US dollar. I don't see XRP. So to me, it's thinking about stablecoins, tokenized deposits, and primarily fiat today. So we have the Australian dollar, the Canadian dollar, the Swiss franc, the euro, the British pound, the Japanese yen, Mexican peso, and the US dollar. And you can look at the partners of G Treasury, a variety of banks. Their old website used to highlight it a lot better in different blogs with Swift, but you can see trusted by industry leaders worldwide. So Quest Diagnostics, we have Goodyear, American Airlines, etc. So when I see this news, I see people complaining, oh, this isn't the volume for XRP or the Ripple US dollar, what's the point? I think it's just about building that access, building that on-ramp, and eventually having that distribution center. Again, Ripple acquired G Treasury for $1 billion, so there's a method to the madness. It's building that entry point for digital assets, just like Brad even says, for CFOs to manage all of their assets, include stablecoins, and stablecoins are growing everywhere. We even had this come out last month by SWE with their US dollar SWE token, or their native digital dollar. Again, being Genius Act compliant, just like the Ripple US dollar. Tokenized deposits, cash equivalents, and then even talking about Hidden Road or Ripple Prime, putting idle capital to work with repo markets. So what's interesting about this article that came out with Ripple Treasury launching the first Treasury Management System, stands for TMS, with native digital asset capabilities. And I put a tweet out here just for bullet points, and it also helps me plan for my video. We can see the first native digital asset capabilities embedded directly into a TMS. So now CFOs and treasury teams, they can view, hold, receive, and manage fiat and digital asset or digital liquidity held within their bank and custody providers in one system. So whether that is fiat or cash equivalents. And we can see that no other treasury management system offers this. So this is a first mover to bring in digital assets natively. And notice they're bringing in digital assets. It doesn't mean that they're necessarily settling the flows. If they are, please let me know, or how you know that, because I'd love to see those metrics. But we can see that XRP and the Ripple US dollar appear in the same account structure as cash, so they are behaving like cash into this system, or this one single system. There's no fragmentation between wallets and exchanges. Everything is in one financial stack. So even right here, and this is a quote by Mark Johnson, VP of Global Product at Ripple Treasury, the design principle behind both capabilities is that digital assets should behave exactly like cash with the platform or within the platform. Treasury teams shouldn't have to think about whether a balance is on-chain or in a bank account. They should simply see their position, and I really like that. So this is really cool to see, and from time to time, I'm just going to check in to treasury.ripple.com and look at this number adjust or update. So we're at 13 trillion according to the most recent article. They need to update this, and we can see 13,000 connected banks. So when I see this, 12 or 13 trillion out of the $120 trillion corporate treasury payments market, I want to see that number increase, but I also want to see digital assets, their dominance increase in that. So it's not just fiat and cash equivalents. We want to see stablecoins and then even digital assets or crypto assets. And obviously that'll take time, but hopefully things play out really well with the Clarity Act passing officially this year, so fingers crossed. And in terms of regulation, so I tweeted this out the other day. I mean, really kind of just frustrated, annoyed with price action, geopolitical events, global liquidity dropping. It's a crazy world we're living in. But where we're at today is we have the Genius Act. So that is a federal framework for stablecoins. So that is done. But what we're waiting on is the Clarity Act, defining crypto market structure between the SEC and the CFTC. So that's in progress. And the next big wave of rules are likely going to be centered around tokenized assets like real-world assets, absolutely anything, custody and lending frameworks. I mean, heck, we could even throw AI regulation in there. And why I want a bull run sooner than later is because think about it and look at past cycles. When we have a bull run, there's more liquidity, there's more users, there's more building because there's more attention, there's better funding, and there's faster regulation. So we don't want to be in a period for several years of illiquidity and global liquidity dropping. We need that hype cycle, whether that's led from quantitative easing or anything else. Alright, next up, so we just had some recent news with the United States Department of Labor proposing a rule that opens the door even further for crypto and 401ks. Now, I swear this was a real article by Reuters on March 30th. When I search it, I'm no longer able to pull up the URL, but I did yesterday. So basically, this is a rule that opens 401k plans to private equity alternative assets like crypto. Now, this door is already open, but this is going to be opening things a lot further, because it removes the litigation barrier that has prevented fiduciaries from seriously evaluating the option to add crypto and alternative assets. So we have approximately $10 trillion US sitting in American 401k plans. And looking at the total crypto market cap today at $2.47 trillion. So right now, this $10 trillion is basically 4 times larger than the entire crypto asset class today. And this includes 90 million Americans using 401k plans. Now, there's definitely a sizable or maybe even the majority of Americans own crypto today, but the exposure is nowhere near the value in 401k plans. So I'm emphasizing, I know during bear markets or periods of illiquidity, we are still early. This is a tech shift. This is just like the internet. The internet evolved greatly. I mean, you can go back to the 90s, the 2000s, the 2010s, etc. This is evolution of a giant tech shift, with RWAs, lending frameworks, and retirement. And that's exactly why I've had a Roth IRA with iTrustCapital for over 6 years, and I plan to have one up until retirement. To get that tax-free growth in this tech shift, whether I hold crypto assets, precious metals like gold and silver, or any new assets as regulations improve, with lending frameworks and even RWAs. Think about Amazon, Nvidia, look at these stocks that have been around for several decades and crypto is still nascent. So if you do anything today, consider checking the link in the top of the YouTube video description and the first link in my link tree. So you can create an account for free on iTrust, and whenever you decide to fund, you get a $100 funding bonus. Now, speaking of lending products, and I know we talked about it live during a Twitter Spaces or X Spaces with Jared Feldman over at iTrust back in February. We had this shared by Crypto Eddie, so this is Doppler Finance, XRP Lending, and Ripple US Dollar Lending. So she was highlighting the XRP financial stack. We have the Ripple US Dollar, Standard Custody, we have Ledger and Settlements with the XRPL, we have Custody or Ripple Custody with Medico and Palisade, Infrastructure or Wallet as a Service. We already went over Treasury with G Treasury or Ripple Treasury, and then Hidden Road, which is Ripple Prime, the Prime Brokerage, and now we have this, Doppler Finance. So she's going over the slides presented at XRP Tokyo, and we can see right here. They work with institutions, so we have an XRP vault and we have a Ripple US Dollar vault, so this is yield as a service. With institutional partners like Evernorth and SPI Ripple Asia and custody partners like BitGo. So we have an API integration with this yield as a service, basically institutional infrastructure. So this is really cool, and I was checking out their Twitter page. You can go to their, what is that called? Linktree? I don't know why I just had a brain fart there. And then you can go to their official website, and then right from here, what you can do is go to About and open up the docs. So we can see you're earning on top of your holdings, and then we can check out their products, and right now it says lending is coming soon, and we have Doppler Vaults. So right now, we have the total value locked for this Doppler Vault at $129 million. We can see the XRP vaults or the APR, the rewards, is 3 to 4.5% with 87 million. And then we have the Ripple US Dollar issued on the XRP Ledger and Ethereum, and we can see offering about 7 to 11%. So this isn't really some trustless DeFi yield, this is more of like an institutional wrapper for XRP yield infrastructure. And it's using a crypto native front end, so this looks like a really cool product. Now obviously, do your own research, I'm not telling you or I'm not promoting to go use this. What I'm pointing out is that we are having institutional yield infrastructure for XRP and the Ripple US dollar being built in front of our eyes. And this is really important for everybody that wants to lend out or earn yield on their XRP, since the XRP ledger is not natively proof of stake like Ethereum or Solana. There are absolutely risks with lending out your assets, so please keep that in mind, but we want to see this infrastructure grow so that we can have higher yield and better tools available. And then we'd be able to see other exchanges and platforms launch some really cool lending products. And what I mean by that is in the next decade, we're going to be able to generate yield from lending, trading, real-world assets, treasuries, absolutely anything, or even use collateral and move things across chain. So there are a few ways that all of this could play out in a few different types of products. There could be institutional yield vaults like the Doppler model. There could be native XRP lending markets like XRP lending that we're already seeing. There could be RWA integrations with, T-bills, private credit, real estate, anything with RWAs. There could also be a lot of cross-chain implementations with side chains or even EVM chains. Another one I'd like to see is XRP actually being collateral for loans in margin trading or just getting a loan from somebody. That'd be really cool to be able to lend out your XRP in order to get a loan so you don't have to pay taxes on that. And there's other mixes that could use, stablecoins and XRP together. You could integrate with other financial apps. There's so many options. And just like Crypto Addy shared over here with their institutional partners like Evernorth and SBI Ripple Asia, and then even custody partners down below, including BitGo, and wallet integrations and centralized exchange integrations. It all starts right here where they can make yield auditable and track it right on the blockchain. Then they have to regulate it, and then they can make it scale. So like for lending markets, you could imagine earning 3 to maybe 8% off your XRP with institutional vaults if they mature. Imagine being able to make like 5 to even 12%. I don't really care about like high risk DeFi strategies because I'm not trying to lose my funds and make, 25% or 20% yield and potentially lose my XRP, so I'm not necessarily interested in that. But there could even be RWA yield opportunities in the future where you're making 4%, 8%, or even 10%. So anyways, rant's over, but yes, I absolutely am going to be holding crypto assets long term, whether that's in retirement or anything else in cold storage, and I want to be able to earn yield, but I want to be able to earn it safely. So when these products mature, I would love to be able to earn, 3%, 5%, or 8% on top of my XRP holdings. And that's where it gets crazy powerful with compounding interest, and you can run the math with compounding interest. It is the 8th wonder of the world. So anyways, I hope you guys enjoyed today's video. Thank you so much for watching, and a big thanks to all to hit the like button and let me know your thoughts down below, and I will catch you in the next one. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.